Asian markets closed mixed Friday after a bounce on Wall Street, while Bitcoin continued its march higher to move within touching distance of the $100,000 mark. Rising geopolitical tensions tempered the atmosphere and kept oil elevated after Russia hit Ukraine with a new generation intermediate range missile and also sending a warning to the West. The Nikkei share average rose by 0.68%. The Hang Seng Index declined by 1.9%, while the Shanghai Composite Index lost 3.06%. Over in the US, markets saw gains across the board, although tech stocks saw some declines, with market players still reacting to Nvidia's expectation of a revenue slowdown, despite exceeding expectations in terms of its third quarter earnings report. As usual, investors are also trying to work out what the next Fed rate move will look like come December. The Dow Jones Industrial Average rose by 1.06%. The S&P 500 ended the session up just over 0.5%, while the Nasdaq Composite Index ended flattish, up 0.03%. The JSE is making a slight turnaround, down over 2% at 85,520 index points. The rand is trading at 18.05 against the US dollar, 22.61 vis-a-vis the British pound, 18.82 against the euro. Gold is trading at $2,707 an ounce, platinum at $966 an ounce, while Brent crude oil is trading at $74.35 a barrel. Well, I'm joined by Warwick Lucas. He's a portfolio manager at Vunani Securities. Thanks very much for joining us, Warwick. So at the end of the week, of course, I tend to ask you the question, to reflect on the week that was on global markets and what you anticipate to be the key drivers as we head into December.
Well, hi there. I think that markets seem to be in somewhat of a digestive phase. In the US and major international markets, I think they're asking themselves quite a lot what a Trump presidency is actually going to look like. Even if we excluded social issues, the Trump presidency is likely to look very eclectic by conventional standards and even in economic policy alone. I think locally in South Africa, while efforts at turnaround by the GNU have been quite extensive and a lot of work done, it feels like turning the oil tanker, and it's almost a sense a bit like watching a computer mouse's hourglass uploading and uploading. So yeah, a bit transitory all in all. US economic growth looking like it will still be positive, but a bit more muted than we used to. So quite a few moving parts there at the moment.
Yeah, a lot of uncertainty indeed. So what's your take on developments with Bitcoin? It's flirting with $100,000 if it hasn't hit it already.
Right. So I think the key thing that we saw in terms of the last 4 years is that the primary strategy to date from the US government has been more or less one of, we know it's there, we don't really like it, we don't really understand it, but we can't get rid of it either. So the actual regulation which was necessary to take crypto mainstream was really always going to wait until the outcome of the most recent election. And the fact of the matter is that either president was likely to do something to try and regularize crypto. However, the market anticipation seems to be that the Republicans have a better idea on how to go about it, and hence the feeding frenzy.
So yesterday, the Reserve Bank cut rates by 25 basis points, seemingly quite cautious move, even though they say inflation is looking quite good in the short term. Do you think that was the best decision? And how did the South African stocks react? And what do you think this means for the rand, for example?
So on the face value of it, it did seem a little tentative, given that our most recent inflation CPI number was only 2.8%. However, I think I should caution viewers that it's important to realize that this may very well be a cyclical low for inflation, because there was a very big component in the in transport. We saw a sharp cut in fuel prices, which distorted things quite a lot. So on a like-for-like basis, if you added back a transport component, you'd still be looking at a low inflation number of around 3.6, which is pretty low, pretty under control. But I think the SARB might be concerned about movements in the dollar, relative inflation and interest rates between the US and SA, and perhaps some concern about local regulated price increases, such as electricity. And I think then the other concern is, well, they obviously want to see the rand show an element of stability as well, which high interest rates do provide, so that we don't wind up giving back some of those benefits from the reduced transport inflation.
Yeah. So looking at the retail sector specifically, are you hopeful that this sector could be positively boosted by the lower interest rate environment, even though, we've only had a cumulative 50 basis point cut? And also the fact that we're hearing that a lot of people have drawn down on their two pots, and the Reserve Bank also not thinking that people are going to be paying most of that money down on debt, but out on consumption in actual fact.
So I think it certainly would be positive for consumer. I think that the kind of tone of response that I saw in share prices to me suggested, well, that's nice, it's headed in the right direction, but it's hardly revolutionary. I think there were generally moderately positive moves there. But I mean, looking at retail sales themselves, which we saw come out a few days back, I mean, it's generally a fairly cautious kind of profile we're seeing there, with cautionary cyclical type products such as clothing and hardware and so on, looking pretty muted. Only appliances and furnitures under that description looking positive, and then the defensive ones such as food and so on managing to keep on going, but no booms there, that's for sure.
All right then, thank you so much, Warwick, as always, for your time and insights. Warwick Lucas, he's a portfolio manager at Vunani Securities.